Alright, we've heard your comments about wanting to know what the 5th version of yield farming was, and it's finally here. Make sure to sit back in your seats and buckle up, because this one is essentially gambling and can take you for a wild ride if you hold on too long. While you're buckling up, we want to welcome you to Whiteboard Crypto, the #1 YouTube channel for crypto education. In our videos, we explain complex cryptocurrency topics using analogies, stories, and examples so that you can easily understand them. Today, we're going to explain what Degen Yield Farms are and what you can do if you experience one. But before we go off the deep end, we need to explain some concepts that'll help you understand it a little better. Let's dig in. What is a yield farm? A yield farm is simply a decentralized application that runs on a blockchain network that allows you to deposit your cryptocurrency coins and tokens in hopes that you earn free coins as interest. Now, many people do earn a lot of money this way. We actually have an entire video on what yield farming is, and you should check it out. In that video, we mentioned 4 other safer yield farming opportunities. However, we said at the end of that video that there was a 5th version that was essentially gambling. Well, this is the 5th method. In short, there are many ways to earn free crypto, but usually the safer that it is, the lower amount that you'll earn. Whenever it comes to these degen yield farms, the risk is very high. However, so is the reward. Some farms, in fact, have paid out 4 to 5% an hour in the first few hours, and then up to 2% a week for the first few weeks. Receiving 50% of your investment in a few weeks is not unheard of. Compared to the stock market, this is really easy money, but it is way riskier. For reference, degen refers to degenerate, which you should keep in mind for the rest of this video. So now that you know roughly what yield farming is, let's get into the specifics of the farm token. Almost all degen yield farms create a new token to give out, and this is called their farm token. This token really has no real value, but the people who start the yield farm will put up an initial deposit of true money. Now this true money is added to a liquidity pool so that people can actually buy the token, and it's also used to set the initial price. For example, if they wanted to set the initial price of that farm token to $1, they would simply put in 1 farm token and then $1, and then let people trade using the liquidity pool. However, if they wanted to set the price to $10, they would put in 1 farm token and $10. Even more so, if they wanted the price to be $10, they could also put in 100 tokens and $1,000. Hopefully by now you get the idea. Since they can print however many of these tokens they want, they can essentially set the initial price of the token to whatever they want. To new investors, however, this can be tricky. Now this is the first thing to look out for in a yield farm. If the liquidity is very low, it basically means that even the developer doesn't believe in the project. They aren't willing to put forward their money. Also, having low liquidity means that the price is very volatile. As an example, if a developer only put in $1 and maybe a token into their liquidity pool, I personally could double, triple, and even 10x the price very simply by spending less than $100. So now you know kind of how a farm token works. Let's get into the specific tokenomics of that token. So before the degen farm actually launches, there is almost always a pre-sale. Now this is where people can buy their farm tokens and then deposit those tokens into the farm so that they don't have to wait for the launch. With the farms, you can actually deposit the farm tokens, but you can also deposit other tokens that you might have. Now the farm always offers the best rewards for those that stake the actual farm token. Why? Well, this is actually the only reason to buy the farm token, to put it back into the farm to earn a higher rate. A safer way to farm is to deposit a token that you actually believe in. For example, Ethereum. Now the way that these farms work, which are actually pyramid schemes, is they pay you in that useless farm token. And since they essentially can print as many of those farm tokens as they want, they use the temporary price to set the temporary APR. Now hopefully you get the idea. You deposit Ethereum, and for example you might earn Polywhale, which Polywhale is actually a famous degen yield farm that lots of people have invested in. But the truth is, nobody really wants to hold Polywhale as a long-term investment. Instead, they want to trade their Polywhale for Ethereum or Tether or Matic, something that they truly believe in long-term or that they can cash out easily through an exchange. And because of this, many farmers will deposit their Ethereum, and then as soon as the farm launches and it starts printing out a bunch of those farm tokens and then literally giving these newly minted tokens to the people who deposited, they will immediately sell their farm token. Now when it comes to investing in these farm tokens, the more of your collateral that you deposit, the more farm tokens you will receive. You might be wondering, since they are essentially printing a ton of the farm token, doesn't the price fall? Yes, always, the price will fall. Since they are always printing more of this farm token, the price will always fall. Why? Because there will always be really smart farmers who actually understand how it works and will immediately sell their useless farm token for a valuable token like ETH or BNB or Matic. In short, smart farmers try to sell their farm token as fast as possible, and these smart farmers can have hundreds of thousands of dollars invested, which means that they actually can drop the price very quickly. Speaking of that, I actually invested in one to test how they worked, and the price rose and fell before I even finished my lunch with Nico. I was lucky enough to get my funds out before they actually yanked the liquidity and ran away with a ton of the investors' money. Moving on, let's talk about the deposit fee. Because you might be wondering, why would someone start a farm like this if they don't benefit from being a developer? They're putting up their own money to start the farm. What are they gaining from it? Well, this is where the deposit fee comes in. When you deposit any token other than the farm token to stake, almost all farms take a 4% deposit fee. This means if you deposit $100 of Ethereum to that farm, the farm will immediately take $4. Now this doesn't seem like much, but the most popular Degen Yield farms have between $100,000 and $4 million worth of tokens staked, which means that 4% quickly becomes profitable. Now this also means that people have to keep their money in the farm longer just to break even to earn back that 4%. Well, if you know what a pyramid scheme or a ponzi scheme is, it is any business where to grow the business, the owners must continue to take money from new members and give it to the people who got in first, so that they give them a false sense of security and success. To us, Degen Yield farms smell very similar. Any money that you earn from a Degen Yield farm is probably and definitely the 4% fee that someone else has deposited after you. Now, the developers usually claim that this 4% deposit fee is used to advertise, to develop, and to add money to the liquidity pool. But in the crypto world, these are just promises. In truth, many people lose money in Degen Yield farms, and many farms are just outright scams. In the crypto world, a rug pull is when a project is abandoned by its developer and the money is stolen, which you can actually check out our video on rug pulls for more information. But rug pulls happen often in these farms. Now, we'd like to say if you've enjoyed this video so far, please consider clicking the like button, as we promise you, you will never get rug pulled investing in this channel. In fact, so far we have spent over $8,000 of our own money and 3 full months of our time working on this project, and we're not even monetized yet on YouTube. So your little like or comment will go a long way in growing this channel, we promise. And we're always thankful for any feedback. Now at Whiteboard Crypto, we do take sponsorships very seriously. We want our channel to stay 100% educational and not advice or suggestions. So we can't tell you not to invest in these Degen Yield farms, morally for the channel or legally for our wallets. But what we can say is that we personally are not going to touch these farms with a 10-foot pole. To us, the evidence is overwhelming that they are essentially high-risk gambling in the crypto world. We also want to show you what happens to almost any Degen Yield Farm token. Now, a lot of people go, "Oh, look at how much the token has risen before the launch. I should buy it before it launches." Or, "This farm has a lot of money locked into it. Maybe it's a good project. I'll buy the token." If you want to take a look at a bunch of past farm tokens and see what they have done historically, check out some of these images. If you look closely, you'll notice they always go to zero. This is because they keep printing more and more, and the people earning them simply just want to trade them for a valuable token to get back their 4%. So just like any good parents who tell their children not to drink, we know that you are curious and may want to try it. Similarly to how my dad told me, if you ever need a ride, just call. Even if it's 2 in the morning and you think you're going to get in trouble, I'd rather have you home safe than in a ditch. We also want to offer you similar help. Now there's a tool out there called the Rug Doctor. And basically what it is a compilation and a review service of these Degen Yield farms. And the creator actually goes through and will read all of the smart contracts in order to attempt to offer help for any humble yield farmers out there. If you want to check it out, just go to rugdoc.io and you can see all the projects that the team has reviewed. Now another great tool out there is called VFAT. It allows you to interact with the smart contracts if the website goes down for any reason. For example, their host could have an outage, they could have taken the site offline, or maybe lightning struck a server that didn't allow you to view the website. VFAT keeps track of all the smart contracts so you can actually interact with the blockchain portion of the Degen Yield farm without needing to access the website. One of the very first rug pull ideas was actually where a developer would launch a farm with a website and then simply take the website offline to do a few tricks to steal the investor's money. Well, the VFAT website helps you mitigate against those attacks. It's a very helpful tool. We'll leave a link to both of these tools in the description below. As we find more helpful tools, we promise to continue to share them on this channel. But as we end this video, hopefully you know what a Degen Yield Farm is, how it works, and the risks involved. Leave a comment below if you know any other helpful crypto tools that we haven't already mentioned, because we'd love to share them here on the channel and possibly give you credit for sharing. Lastly, as we end this video, we hope that you've enjoyed this video. We really hope you've learned something, and most importantly, we hope to see you in the next one.